Good morning, and thanks so much for tuning into the trade setup. Excuse us, we are a couple of minutes late. By the way, you can Virat alerted me to a squeaking noise behind me. That's the squirrel. We can't do anything about it, so bear with it. Let's get into the global news flow first. JP Morgan CEO Jamie Dimon has called the Fitch US downgrade, quote unquote, ridiculous. Asian markets, though, have fallen as Wall Street sees the sell off after the US credit downgrade. Oil settled lower despite the record US crude shock drawdown, and that shouldn't surprise people simply because if there is a fear around consumption, then oil, after having such a smart rally, could see a bit of a corrective move, which is great news for India, by the way. And I don't think that's the reason, but Morgan Stanley has downgraded Australia, which is fine, but raised India to overweight. And we'll get that details in just a moment. And Foxconn plans to invest about $600 million on two component factories in Karnataka as per the state government. So this is good news from a country's perspective as well. Now, the fourth line on this plate, which is Morgan Stanley, is downgraded Australia, but more importantly, raised India to overweight. So why has that happened? That's a really big piece of news, right? And this is the Morgan Stanley regional team, Jonathan Garner. They have been kind of underweight India for a long period of time, even as Rhythm Desai in India was very bullish on India. Now, this is the global team, the Asia Pac team, which has done this. Now, they say that India has risen from number 6 to number 1 in our process, with relative valuations less extreme than in October. And I think this is the point that a lot of people are making, that yes, everybody talks about India's valuations, but consider what October was. India is nowhere close to that. Multipolar world trends are supporting FDI and portfolio flows. India is adding a reform, according to them, and a macro stability agenda that underpins a strong capex and profit outlook. And they see a secular trend towards sustained superior US dollar EPS growth versus EMs over the cycle, with a young demographic profile supporting equity inflows. Mind you, they're talking about growth, dollar growth, and not talking about this being essentially just an FI driven rally. They're talking about how a young demographic profile is actually leading to domestic inflows into the country, and that's quite stunning. Viewers, um, this is uh, this is massive, and in some fashion, when I talk to a lot of people and they miss Rakesh Junjunwala, I miss too. There is a piece in 2017 that he did an interview with, when we were called Bloomberg Quint then, wherein he spoke about how India will see domestic inflows like never before. And maybe a few people might have smirked or scoffed at that point. But frankly, the underpinning of what India has done amazingly well over the last 3-4 years is the kind of domestic inflows that have come in. Indian stocks owned by Indians through mutual funds and through direct equity has been quite stunning, really, and giving that support to the Indian markets. Also, in terms of the exit that the FIs got, because the domestic flows were just so strong, to not let the exits happen at a very large damage to the ticker. So quite stunning, really. Okay, trust Virat to bring that as well. But this is the interview that I'm talking about. This is November 17, 2017, wherein he spoke about how Indian domestic inflows. There's a boom of Indian inflows coming in, and it's worth listening to that interview, wherein he could foresee something that most people couldn't. Quite stunning, really, that prediction then. Okay, what happened yesterday? That's the key point. All sectoral indices. Okay, let's do this. Let's do the US markets first, 2% lower. The other Qs also are not in favor, essentially. And the Asian markets too are trading in the red. And therefore, we might well have the GIFT Nifty being sedate, somber, maybe a negative bias, if you will. But remember that, okay, up 1.2%, but flat, remember that we had, actually, this number seems a bit off, I must say. So ignore that number. But the point being that we okay, let's tell you what happened yesterday, and then I'll get to the point that I'm trying to make. First, what happened yesterday? All key indices closed in the red. Wednesday's volumes were lower than Tuesday. India VIX rose sharply by about 10%, and top losers were the PSU Bank, Metal, Auto, and Media. Now, the second line here is important. At one, the volumes yesterday were lower than the volumes that happened on Tuesday. So we fell not necessarily on very large volumes, and therefore kind of escaped a distribution day, if you will. And we closed off the day's lows, which is actually a good part. And therefore, I've not given a trade setup today simply because, frankly, trying to second guess what the market will do today, or will we recover, etc. It's better to actually see what happens today before trying to profess or prophesize what could happen. Dr. Sikanara and Jay Bala had conflicting views yesterday. We spoke to them. But I think, to my mind, that 19,500, which is sacrosanct level from a puts perspective, still remains a key. And let's see what happens today. Do we kind of defend that on the future side? Do we go lower and cross that first swing low of 19,350, or do we defend that? Because if we defend that, then it's great. And there is piece of positive news, right? A large global brokerage has put India on overweight rating, and that is something that should please the street. Flows though were negative, 1877 crores, FI outflow. DI is about 2.23 crores. So that's the limited point. Big day for earnings, by the way. Enterprises, Adani Power, both of them come out with numbers. Adani Group entities, Bharti Airtel, important telco number. Dabur, and it'll be important to see what Dabur has to say with regards to the kind of rural growth or lack of it that we're seeing. Commentary from Cummins would be important from a capex perspective as Blue Star to show what's happening with the cooling solution space. But most importantly, it could be a big pharma day. Mankind Pharma came out with a robust set of numbers. We have Piramal Pharma, Lupin, and Sun Pharma, the big one. And I think could today turn out to be, the next 2 days turn out to be pharma days of sorts, by virtue of the fact that Mankind is saying what it has. And there are two big names, which is Sun and Lupin, coming out with numbers. I think I'm really watching out for that. There's also Newland Labs. There is also, as I said, Piramal Pharma. So interesting. And Zomato, after the big uptick that is seen, can the numbers do justice? I think it's a big day today from an earnings perspective. What about stocks to watch though in the session today? It's a very long list, so bear with me. I might miss out on a few names, so please excuse me for that. But first, Vedanta. Twin Star Holdings will sell 4.3% stake via block trade, will sell about 16 crore shares at a floor price of 258.5 rupees per share, discount of almost 5%. Expect the stock to start lower. This shouldn't surprise. The only question is, will the stock stay low or could it actually come back? I think that's what a lot of people are confused about. A lot of traders might be thinking that at a 5% lower piece, by virtue of what's happened to almost all the other companies as well, could there be some bit of traction into Vedanta if the news gets absorbed? Well, difficult to say, to be very honest. I would suspect that it will start lower and maybe even stay lower, but who is to say that I'm necessarily right? Maybe stocks could do slightly better, so slightly worse. So let's see what happens to this one in the session today. So I'll clearly be watching out for Vedanta in the session today. That is one stock that will start off lower. My guess is it'll probably stay lower. So let's wait and watch. There's also this Unichem open offer, so that is something that will keep people in focus, stocks in focus. So that's to be keenly watched out for. I was looking for one more. I remember there was one more deal maybe in the offing today, but let's wait and watch. I think we'll try and figure that out. Never mind. Now the earnings. Interglobe Aviation. Well, revenue is up 30% at 16,683 crores. Bloomberg estimates of 15,622, better than estimates. EBITDA are up, EBITDA margin or margins at 31% versus 5%, and the estimates was 21.55%. So imagine the beat that Interglobe Aviation has done. Net profit at 3090 crores versus a loss. The expectations were 1719 crores. Imagine the beat there. So on all counts, Indigo has beaten the street. The best results of the day today. I would suspect the stock will start off higher. And remember, aviation as a pocket is actually doing very well. Yesterday, 2 days on a trot now, I've seen Jet Airways being locked on an upper circuit. Not that it's a functioning airline, I'm still saying SpiceJet, because of the news report around Carlyle having an interest in the company, that stock was running yesterday. And Indigo, some numbers today, strong numbers. And remember, after Q2, when the yields may fall, we are entering a busy flying season by virtue of the Cricket World Cup, by virtue of G20, by virtue of it being a peak tourism sector and festive season. Boy, I think aviation stocks are in for a roll. I wouldn't be surprised if Indigo has a good start and may even stay higher. I'm not saying that it'll start off, let's say if it starts off X% higher, I'm not saying it'll stay there only, but expect it to end a day strongly in the green is my belief. Titan is the other one. Not a good set of numbers, unfortunately. Revenue is up 26%, which is actually very good. But EBITDA down 6%, margins 9.5% versus estimated 12.9%, net profit down 4% at 753 crores. The estimates were 913 crores, so it's missed estimates by a significant margin on the bottom line and the margin front, and certainly could have come under pressure. Remember, on July 12th, we had spoken about a Morgan Stanley note which downgraded Titan, saying that it had run up too fast too soon, and Q1 results will not be similar to what happened in Q4. Well, I think their prophecies turned out to be true. Revenue growth was primarily due to the 950 crore or 940 crore bullion sales for Titan, by the way. And raw material cost and other expenses impacted the EBITDA margins quite significantly for the business. So let's see. We'll be talking to the management today, Titan. So I think you will want to hear in that conversation about what they have to say about Q2 and about the quarters ahead. So I think that's an important conversation that people might want to hear. Then the third one, which is in focus today and will react, is Gujarat Gas. The revenues were down 26% at 3923 and lower than the estimated 3971. So weak numbers and lower than estimates. EBITDA down 36% at 388 crores. The estimates were 516. Margins at 9.89%, estimates for 13%. Net profit down 43% at 215, estimates for 304 crores. Not a good quarter. In fact, the reduction in revenue from operations mainly reflected the lower selling prices for Gujarat Gas. The total volume of 9.2 MMSCMD was 5% lower YOY and 3% below estimates. The higher cost of gas dragged the EBITDA per SCM to 4.6, which is the lowest in the last 6 quarters. And the stock was cut to a sell at Citi. Has been cut to a sell at Citi. The target price is 420. So Gujarat Gas will have this issue. And like I was saying, just a bit of a recap. I was talking about this Morgan Stanley note on Titan. This was on July 12th. This is the note. This is not a current note, by the way, but they downgraded back then. I'm guessing that the note will still hold true. I think we'll see a correct move in Titan and Gujarat Gas both. Now, some good numbers. I've given you bad news thus far. Some good numbers. Mankind Pharma, a very strong set of numbers. Revenue up 18% at 2579. The estimates were 2446. EBITDA 44% higher at 655. Estimates were 560. Margins at 25.4. Estimates were 22.9. Net profit up 66% at 487 crores. The estimate was 398 crores. Such a strong quarter. Well, the company had a very strong debut on the bourses. I was justified by Q1 numbers as well. Narayan Rudalaya, revenues up 19%, 1233, estimates were 1162, so better than estimate on the revenue front. On the other counts, it's kind of in line, though. EBITDA, you could argue at 271 versus 253, it's beaten estimates on the EBITDA front as well. On the margins front, largely in line. Net profit up 66% at 184, the estimates were 156. Essentially, top-down beat flowing to the bottom line. Good set of numbers, may react positively. Webber Global, revenues up 4.77%, so nothing great about that. But margins at 8.83 versus 6.7. Net profit at 51%, higher at 295 versus 195. So could react positively. The twister is Paradeep Phosphates. The stock was down about 3% yesterday. Revenues are up 25% at 3,054 crores versus 2,433. There's an EBITDA loss and a net loss, both of which numbers were concerning optically. But the company in its presentation has said that there's a one-time adjustment because of which there's an EBITDA and a net loss. Without the one-time adjustment, Q1 EBITDA would have been a positive 285 crores. So that is it. And they say, by the way, that they confirm that the expansion in our phosphoric acid capacity to 5 lakh metric tons at our Paradeep site is completed effective 1st August. The benefits of this backward integration are expected to accrue from Q2 FY24 onwards. Now, the point being, there are analysts who might believe that, and maybe rightly so. I think the stock price movement will tell us whether the street has liked the numbers or not. I would suspect that it will not be too unkind, and therefore there will not be a slam dunk. When you look at it optically, an EBITDA loss and a net loss, you would believe that the stock could actually start off on a lower circuit. That may not happen because of these one-time adjustments and the commentary that the company is given for the outlook ahead. So a tricky one. I would suspect it will not be punished, but a tricky one nevertheless. So I'll leave it at that. Then HPCL, again a tricky one simply because the numbers notwithstanding, the Nomura note speaks about what could happen ahead, which is more important. And Nomura says they've downgraded the stock to a neutral with a revised target price of 270. They say they believe that the outlook for the refining segment is okay, but the scenario analysis indicates that the marketing margins have plunged into negative territory, and a higher leverage to marketing for HPCL means that it will be more impacted than the other OMCs, and therefore Nomura has this target price of 270, which implies a 2% downside. I believe the current price is slightly above 270. So I would suspect that HPCL will have a nothing kind of a day, a skittish morning. Metropolis, not the best of numbers, you have to admit. Revenues down 1% at 277 crores. Net profit at 29 crores versus 33. Margins at 22.7 versus estimated 24.8. So not the best of quarters. May react a little bit. Sheela Foam, mixed quarter, revenues down, but margins better, and as a result of which the net profit in the green, or in the green, yes, but net profit above what they did in the last quarter. So again, difficult to say what this one could do. I suspect VIP could definitely have a weak day because revenues were up, but margins collapsed. 12.67 versus 17.37. PAT down at 16% at 57 versus 69. So very weak quarter. May react. I mean, revenues were okay, but margins and PAT weak. Therefore, may react negatively. Kirloskar Ferris, again, mixed numbers, but the EBITDA performance was healthy. May react positively. And Fusion Microfinance seemed okay. PAT up 60%, GNP has improved, NIMS improved, and I up 59%. I mean, find a fault with these numbers. I actually couldn't. Now, the point is, am I missing out on something is the key thing. Let me see. Yeah, there are a couple of brokerage notes, by the way. M&M Financial has been cut to an underweight at JP Morgan, target price 250. PI Industries has been rated a new buy at Jefferies, target price 4220. So therefore, watch out for both of that. What else? Have I missed something? Yeah, I'm sure I missed something. So, like I just recapping. But by the way, Ambuja con call was very strong, but CLSX cut the stock to a sell. But the management is guided to volume growth of 10 to 15% over the next 2-3 years. EBITDA likely to be in the range of 1400 to 1500, which is actually really big. So I think the con call was very good. Let's see if there is a bit of a reaction there. Standard disclosure, of course, Ambuja is owned by Adani Group, which also owns PQ Prime, which is the platform you're watching. So keep that in mind. SKF, by the way, was steady numbers. I missed that number. EBITDA was at 203 crores, up about 21% QOQ. So that was actually good. Precall and Sterling Tools reported strong numbers too. So that's to be kept in mind. And Engineers India was weak, by the way. EBITDA was just 71 crores versus 167 crores QOQ. Don't look at QOQ, but I'm just saying it just really come off. Yeah, and the last one, I was telling you about another block deal. So L&T Finance is the other block deal today. So do watch out for that stock as well. So lots of reactions today. But my key point, viewers, is that one needs to look at the market and whether we show some resilience today, because we have a bit of a corrective move. There's a big overweight on India, so on and so forth. And two, watch out for whether it could be a pharma day today. Remember, people, so many people from Kenneth Andrade to a couple of others. We have a good conversation, by the way, tomorrow as well with Dr. Amit Verma on pharma. But my larger point being that keep in mind that from Kenneth Andrade to a few others have all spoken about how the US exposed generic companies actually have value. Now, if indeed Lupin and Sun Pharma also show the kind of performance that Cipla and Dr. Reddy's have shown, then pharma and the big pharma of India, which is exporting to the US and has US operations, could be in for a big role. So keep that in mind. Okay, some queries very quickly. I'll try and take one or two. Market recovered in the last 30 minutes after a steep drop. What does it mean? Well, my belief, Aniket, is what I said at the start, that we actually showed a bit of resilience in the second half of trade, which is actually good news, considering the fact that we have an upgrade as well. That last 30 minutes actually might play into the minds of traders today. We might, and which is why probably the GIFT Nifty is talking about a positive start. Would a US downgrade help India with higher inflows? I'm not quite sure, but there is an impact. To be honest, Jamie Dimon scoffs at it, and he knows much more about it. But Samir, the point being that yesterday Mahesh Patil spoke about this, that this downgrade, if indeed the US economy slows down, might actually pull down all markets, because remember, we are at a high. So that's to be kept in mind, that there could be an intermittent pullback into our markets as well, but very difficult to really pinpoint it down to the exact numbers. So I'm sorry, you won't be able to do that. But what we'll do is that we'll do conversations with market experts and companies today. So you might want to tune in for some of those. So Ashok Shanthalia of Titan Company talks at 9:40. You want to tune in for that. Sanjay Purohit of Sapphire Foods at 10:45. Amira Shah at 11:30 to talk about their quarter. And a clutch of market conversations over the course of the next 2 weeks and possibly tomorrow We'll have two conversations, one with Ramesh Damani and Utpal Sheth, and one with Nilesh and Navdeep Note, talking about their performance or their belief about the India growth story. You want to tune in for all of those. Thanks for tuning to the Trade Setup today.